the future of retail in light of the coronavirus pandemic. When we think about the timeline, we divide it into two: the pre-coronavirus vaccination, which we call living with coronavirus, and the post-vaccination future we call the new normal. This is, of course, hoping and assuming we get a vaccination or very effective treatment over the next 12 months or so. Open air shopping, retail parks, power centres, they should do better, but we do still expect rental declines here, even for the very best space. And when we think about the new normal post-vaccination period, that's really an acceleration of trends that existed beforehand. So what will the new normal look like with that digital disruption? Well, there will be fewer retailers and fewer physical stores, but we do know that the halo effect of having a store is important to local online sales. Retailers will have to choose to compete on many different aspects that they weren't perhaps before. Not only on omni-channel delivery, but price, convenience, shopping experience, the ethics, the brand, the customization, whether or not they charge for deliveries and returns or they don't charge. All of these will have to be played out in a very accelerated period of time. Also evolving rapidly is the customer base. Not only the traditional customers are shopping more online, even in the future, but the elderly and developed economies that weren't previously shopping online now will be. And many cash societies that weren't shopping online at all will be much more engaged in the future. So we do expect fewer visits to physical shops in this post-vaccination phase, but the duration of those visits will be longer, basket sizes will be larger, more money will be spent on leisure. But how the retailer engages with the customer having fewer stores is going to have to change. In many wealthier economies, the retail will focus on its ethics, corporate governance, the provenance of goods. And we expect more customization of products, partly enabled by 3D printing, which could also be an accelerated technology. So those retailers will have less inventory, less space. The seasonality of fashion ranges is going to change. It's going to be less influential in this new norm. And designs driven increasingly by social media and their influences. Now, whilst the government can't support the entire economy into this new normal phase, they may have to support the retail sector in certain parts of it. They may choose to purchase certain assets that are failing but intrinsically important to the social fabric of that local area. Or they could reform the planning process to make it easier to convert a retail centre into another use. And they can start to charge taxes to those pure play online retailers. We're seeing elements of all of these appear already, but there's a long way to go as we get into the new norm. And then finally, the portfolio construction for investment managers will look very different going forward. Landlords will have to cope with higher tenant incentives, more capital expenditure, lower rents, turnover leases, that is leases that are linked to the profitability of a retailer, will be much more common than simply a flat rent paid. Many retail properties will be converted into other uses, but it isn't viable for many locations. And overall, we expect a lower retailer weighting in balanced portfolios. And to do that during this period of high illiquidity, we expect landlords will have to make difficult decisions about what price to sell at. And other landlords waiting on the side will be looking at when is the attractive time to buy into the surviving retail, which we fully believe is going to be there in the future.